Good morning. This is Bloomberg Daybreak Europe. Happy Friday, everyone. I'm Tom McKenzie in London. These are the stories that set your agenda. Global stocks in the green as investors await delayed US inflation data. Fed Chair frontrunner Kevin Hassett calls for a cut next week. Meanwhile, the yen strengthens with the BOJ said to be likely to raise rates this month. Indian Prime Minister Narendra Modi extends a warm welcome to Russia's Vladimir Putin as New Delhi defies pressure from the US over its ties with Moscow. Plus, a Bloomberg scoop: Warner Brothers is said to have entered exclusive talks with Netflix to sell its extensive film, TV studios and HBO assets to the streaming giant in a move that would bring seismic change to the entertainment industry. There was a little bit of trepidation in the earlier part of today's session that was being seen in the Asian markets as we lead up to the inflation print. Backdated it is, but we know the Fed is keeping an eye on it. PCE, of course, dropping later today. But that trepidation has largely been washed out, at least for now. European futures on the front foot. Things have even turned around in Asia as well, across the MSCI Asia Pacific. We'll do a deeper dive of that shortly. European futures then looking to build on the modest upside that came through yesterday, up 0.2%. So you're looking for 4 straight days of gains for European stocks alongside their US counterparts. 5100 futures looking to add just 2 points. S&P E-minis pointing higher by 0.2%. Very modest gains coming through across the US yesterday, but they were there nonetheless. Nasdaq 100 futures looking to add 100 points, up 0.4%. Let's flip the board and have a look cross-asset. Interesting that the dollar and the last 5 weeks is down 4 out of those 5 weeks. You're seeing a bit of dollar softness once again today. That is a boost, of course, largely for EM assets. 410 right now in the US benchmark 10-year, largely stable, but you did see yields creeping high yesterday by the end of the close. Mixed picture when it comes to the jobs data, and we'll break that down for you shortly with Valerie Teitel. The Japanese yen currently then 0.3% higher versus the US dollar. 154 on the reports that the BOJ is getting ready to hike on December the 19th and signal further hikes as well out. $63 a barrel on Brent, just a little softer by 0.1%, and Bitcoin back below 92,000, a little softer in the session by 0.2%. Let's cross over to Asia then. Winnie Su standing by in Hong Kong. Winnie, the sentiment appears to have changed, slightly more positive in your part of the world.
Yeah, exactly. We thought it was going to be quite a quiet session in Asia on Friday, but not quite so. So first of all, we take a look at what's going on in Japan because, yes, we've got that scoop saying that the Bank of Japan officials are ready to raise rates later this month if we don't see much of a shock when it comes to financial markets or the economy. And that's not just it. Like you mentioned, it's more about how they are considering to continue to raise rates if the economic outlook is realized, and hence you see that yen strengthening past that 155 level and providing more pressure on the Japanese stocks, with the benchmarks both down more than 1% because of that reliance of exporters for the Japanese companies. And sticking with the central bank moves, we've also got India's RBI cutting rates by 25 basis points, the first time in 6 months. And we're seeing here how the markets are reacting as we flip the board and take a look at the broader Asia market. So the India stock market benchmark here is holding on to gains up 0.4%. And we are seeing the real estate and the auto sector actually outperforming other sectors. And it's really coming after how the inflation has hit record low. But like you mentioned, overall Asian market fluctuating here, a bit of a cautious mood ahead of that PCE data we're expecting from the U.S. Kospi here is rising, driven by the gains in Samsung, and Hang Seng here also fluctuating a little bit. But when it comes to the Chinese market, we're highlighting one stock in focus today, which is the More Threads, which is the China's chip maker here. So you can see that on its debut day here, up more than 400% in Shanghai. And it is the second largest onshore IPO, raising funds of more than $1 billion. And the funds are expected to be used in its AI projects. And it's such a big stock that we would like to highlight because of how it was founded by NVIDIA's ex-executive, and hence it started by making GPUs and has the ambition to potentially become China's next NVIDIA, and hence a lot of excitement around the country's self-sufficiency agenda and also China's technological capability going forward. Back to you, Tom.
OK, that is a bonkers move, an upside of almost 500% for that domestic chip player over in China. You've got to love the Chinese retail investor. Winnie Su in Hong Kong, thank you very much indeed with the check on the Asian markets. Pressure, as Winnie was saying, on Japanese stocks, of course, on stronger yen. On the back of that Bloomberg scoop around the BOJ looking to hike rates on December the 19th. Let's cross to the geopolitics of Russia and India right now, because India's Prime Minister Narendra Modi rolled out the red carpet for Russian President Vladimir Putin for his first state visit since Russia's invasion of Ukraine. The stakes, of course, are high for Modi, who's seeking to assert India's strategic autonomy after US President Donald Trump slapped tariffs of 50% on the nation's goods to punish New Delhi for its close ties with Russia. For more, let's bring in Bloomberg's Dan Strumpf in New Delhi, who's following all of this for us. Dan, talk us through the kind of welcome, then, that Putin has received by India's leader.
Yeah, good morning, Tom. Thank you so much. So you're absolutely right. This has been truly a red carpet welcome for the Russian leader here. Quite literally, Modi greeting the Russian President Vladimir Putin at the airport in New Delhi. Really quite a rare event for him. And it's really been all smiles between the two of them. You really do have a situation where these two countries are kind of in the same position right now, both facing sort of some unexpected isolation for sure. Russia, ever since its war in Ukraine, under global sanction. But this year you've seen India unexpectedly isolated by the U.S. and under pressure from President Donald Trump, which is manifesting itself in those 50% tariffs that you mentioned, which has really been quite damaging to India's exporters. So you really do see at the center of the agenda for this visit the economic partnership between the two countries, as well as their longstanding defense partnership as well.
Dan, what do you think the US reaction will be to this visit, particularly as we look at potential deepening of ties around defence, maybe energy as well, between Russia and India?
Well, you can expect it to not be very positive, for sure, Tom. I mean, you know, the U.S. president has really shown a lot of displeasure towards India this year over specifically its purchases of Russian crude oil, which were really at an all-time high earlier this year, and at least in the view of Washington, has really kind of helped to bail out the Russian war effort that has dragged on for a lot longer than many people expected. Now, one thing that's important to bear in mind is that India has curbed its purchases of Russian oil in recent months under U.S. pressure. Now you see very likely a deepening economic partnership that's likely to come out of this meeting, as well as some major defense deals that we're expecting as well. So for sure, it's not going to be looked on favorably in Washington. India is really the only major economy that Washington hasn't struck a trade deal yet with, you know, how that looks to unfold in the coming weeks, we'll just have to see. But for sure, this meeting is going to be looked at very closely in Washington and not terribly favorably.
OK, Bloomberg's Dan Strumpf in New Delhi on that state visit by the Russian leader to India. We appreciate it, Dan. Thanks for the update. Meanwhile, National Economic Council Director Kevin Hassett says the Fed should cut interest rates at its meeting next week, predicting a reduction of 25 basis points. It comes as speculation, of course, grows that President Trump is set to tap Hassett to lead the central bank. Let's bring in Bloomberg's Valerie Teitel. Val, this is more of a dog bites man kind of story. Shock horror. Kevin Hassett calling for 25 basis points cut. But it is interesting. We want to hear, the more we hear from him, the more interest there is, of course, particularly around speculation that he could be the next Fed chair. Anything he says has weight and importance.
No, exactly, Tom. And this interview he had on Fox News, he was actually asked, you know, how quickly should the Fed be lowering rates? And he did mention that the Fed should be data dependent, should be data responsive, and aim for low employment and low inflation. So again, maybe not necessarily claiming that the Fed should be cutting rapidly, but should be waiting for the data to do so. He did say, though, that in the long run, we need to get to a much lower rate. So that is his stance. It's been his stance for a long time this year, as he does believe that Trump's policies should have a disinflationary impulse on the U.S. economy in the next year. I do want to mention, though, that there is some speculation that he could run into some road bumps when it comes to his confirmation process in the Senate. Remember, it's a two-stage confirmation process. Not only does he have to accept the nomination from Donald Trump, he has to sit in front of the Senate Banking Committee and get their approval before then sitting in front of the entire Senate in that vote coming coming through. When it comes to the Senate Banking Committee, the votes are quite tight when it comes to Republicans and Democrats split. It's a 13 to 11 split on the Senate Banking Committee. So one Republican holdout can really disrupt this nomination. So again, just a reminder that even though Trump might make the announcement before the end of this year, maybe the early next year, there is still a lot of speculation on just how easy it will be for Kevin Hassett to eventually get that Senate confirmation, given he is so close to the U.S. president. So this kind of chatter in the markets did see his odds of becoming Fed chair yesterday just drop slightly. We're all the way up to 90% a few days ago. We're now standing at 75%. So I guess a reminder that this process could still be long and ongoing.
That's really interesting. That's a really interesting caveat, isn't it? Because there is that process that he would have to go through, or any nominee would have to go through in terms of confirmation. And there is always the risk, as you say, of potential roadblocks. Let's get to the data. Help us understand what came through, because we had the claims data on one side and then we had the Challenger survey on the other. Where do things stand in terms of the labour market of the US, given what we saw yesterday?
Look, there's been a mixed picture on the labour market, but I do think the market gave a lot more weight to the weak ADP print that we had a few days ago rather than the data that we got yesterday. We had the weekly jobless claims that actually came at a 3-year low. So pointing to the fact that maybe the labour market isn't as soft as we think. But the survey week for jobless claims was the week of Thanksgiving. And last year, we were also dealing with a Boeing strike. So there's some kind of crazy seasonals that we have to keep in mind as well. So the market kind of shrugged that off, that tight jobless claims number yesterday, and still is of the notion that the labor market is on a weakening track. Again, let's talk about the data that we have upcoming. We have PCE inflation today, but that is the delayed print from September. So very unlikely to shift the Fed's thinking from their decision next week. We have 2 more weeks to wait for the November CPI and the November non-farm payroll release. They're coming the week just before Christmas. That is going to be instrumental to how the Fed shapes policy at the beginning of next year.
OK, and that seasonal craziness as well, worth bearing in mind. Valerie Teitel, thank you very much indeed, making sense of the jobs data for us and leading up, of course, to the PCE print that comes out later today. Talking of which, here's what else to think about today. 2:15 p.m. UK time, the ECB's Villeroy will be speaking in France. Of course, the French Bank of France governor, but also a member, of course, of the ECB's Governing Council. So we'll be tuning in, or at least taking lines from that. Interesting to hear from him. And at 3 p.m. UK time, it is, as Val was saying, the US personal income and spending and PCE gauge, of course, personal consumption expenditures gauge, which we know the Fed scrutinises, even if it is the September number. 3 p.m. UK time. Meanwhile, we'll get University of Michigan sentiment survey as well. Break that for you. You can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to Go on the terminal, and the potential deal between Warner Brothers and Netflix is one of the key stories for us today. What that could do to the entertainment industry. Seismic is the way it has been described. Coming up, Germany's Chancellor Friedrich Merz faces a key test in Parliament later today in a pension bill vote. We'll find out the implications of that political peril, potentially, for the German Chancellor. That's coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, German Chancellor Friedrich Merz's ruling coalition faces a key vote later today. Parliament set to decide on a pension bill, part of the reforms pledged by Merz to reinvigorate Germany. Let's bring in Bloomberg's chief Europe correspondent, Oliver Crook, who, of course, spent a number of years in Germany following the politics and the economy of that country. What is at stake then, Ollie, for the German Chancellor today?
I think once again his authority is at stake, which is something we've seen really from the very beginning of his chancellorship. He's not somebody that was beloved really by anybody in the German sort of political arena, even within the CDU. And there's this pension vote that's going before the Bundestag today, in which there is a rebellion, not just from the broader parts of his coalition, but actually within a fragment of his own CDU, the youth wing, where there are about 18 votes. They have a majority in the parliament of only 12 votes. So theoretically, if the CDU, this part of the youth movement, basically were to vote against it, he could lose this vote. That being said, he's actually getting an unlikely ally in the far left, Die Linke, that is basically going to abstain from the vote, therefore taking out those lawmakers from the pool. Thus, likely this will pass. But once again, Tom, this is very reminiscent of basically even the first day of his chancellorship chancellorship. Well, you'll remember there was supposed to be a procedural kind of rubber stamp vote in the Bundestag that brings in the next chancellor. And for the first time in modern German history, that failed because he could not garner the votes of his own coalition to make him chancellor. So again, once again, this is sort of Friedrich Merz dealing with a sort of authority problem within his own government at a time when, again, the economy continues to contract, continues to stagnate. We've had years of that happening. We have potentially 1% growth into next year, but that we've seen that movie before, Tom, where we expect a little bit of growth next year, then revision after revision down back to zero. And those are the odds that are facing Friedrich Merz. And we should say that consistently since he took over, the AfD is now polling above the CDU.
Wow. Yeah, and a reminder of the political fragility of that coalition and its ability or lack of ability to actually implement change on the ground in Germany. Ollie, meanwhile, of course, you have a lens also on the international sphere and a focus on what's happening with the Ukraine. Are we making progress in terms of eking towards any kind of deal? We hear that Ukrainian negotiators are on their way to Florida.
Yeah, so we understand that they are in Florida. They've already held some preliminary talks with some of the Americans. We did not get a whole lot of readout from those meetings. That is, we're very much in wait-and-see mode, basically, since there was that diplomatic flurry with so much information on that 28-point plan. Ever since that sort of went public, everything's gone really underground in terms of the negotiations. So we don't actually know what the 19 points of the 19-point plans are. We heard from Zelensky overnight in the briefing. He's awaiting to get what he says in his nightly briefing, obtaining full information about what was said by the Russians and what other pretexts he says that Putin has found to prolong the war. Basically, the question is this just Russia basically buying time in order to continue to wage the war without getting any consequence from the United States? The difference is in buying time today versus buying time 3 weeks ago is you do now have these American sanctions on Lukoil and Rosneft that are slowly eating away at the Russian economy. And I think ultimately what we're looking for, Tom, is for the Trump administration and for Donald Trump, 3 options. One is he gets fed up and he walks away from the peace process. 2, he decides Russia is actually the obstacle, ramp up sanctions on the Russians. Or 3, of course, what we've heard in the past, he thinks it's the Ukrainians, and then he basically threatens to withdraw military and intelligence support. So those are really the 3 options, and it comes down, like so many things in these days, to the man in the Oval Office, who he sort of sees as going to be the impediment to peace. We should say there is a little bit of action to watch here in Europe. Friedrich Merz, maybe unable to wield his own authority within Germany, is going to Belgium today to dine with the Prime Minister of Belgium, which of course has been the big obstacle in moving forward on those Russian frozen assets. So maybe a bit of diplomacy in Belgium can break that through.
Yeah, that is certainly something to watch, isn't it, in terms of whether they can release that funding or at least be able to lend on the back of those Russian assets. Ollie, you are in Dusseldorf. You're going to be speaking to someone who is absolutely pivotal to the defence, not just of Germany, but Europe as well. Talk us through the interview you got lined up and why this is significant.
Yeah, Tom, that goes some distance to explaining this wonderful background that we have here. We're in Dusseldorf. We're about a few minutes away from the Rheinmetall headquarters. We'll be speaking to the CEO. And I should say, Tom, you mentioned that it's obviously central to the Ukraine story, the military buildup. I mean, this is a business that went from basically a market cap of less than $2 billion when the CEO took over in 2013, now over $80 billion. This has had a growth since the beginning of the war of 1,700%. And I think that unlike many of the other defense CEOs that you and I interview and that we speak to, there is one difference here at Rheinmetall. They have not hesitated to build out. A lot of these other CEOs have said, listen, we need to see the spending come through. We need to actually see this order backlog hit the sort of a P&L for us. He has said, no, we're going all out. We're going to build factories all across Europe. We're going to expand into all these different sections. We're going to start building satellites and find out all the gaps in basically European defense, and we want to fill those gaps. So that is going to be a conversation for a little bit later today with the CEO to really understand how he intends to execute this plan, and ultimately, what is the ambition for this business in 5 to 10 years? One of the most ambitious companies, certainly in Europe and potentially in the world.
OK, really, really important interview coming up. Bloomberg's chief Europe correspondent, Oliver Crook, leading up to that interview. Of course, we'll bring that to you later today. Ollie, thanks for that update as well on the politics of Germany and movements around Ukraine, Russia and the US on that potential peace deal. We're going to continue the conversation, of course, on Ukraine with Andrew Pudzer, by the way, the US ambassador to the European Union. That interview at 9:30 a.m. London time on The Pulse. Coming up, J Street's record haul this year, switching focus, boosted by savvy bets on artificial intelligence. We're going to bring you the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Legendary investor and Berkshire Hathaway CEO Warren Buffett, of course, is retiring at the end of this year. For many investors, it is the end of an era. Bloomberg Originals looks at how Buffett changed investing forever and what's next for the company he built. Here's a preview.
If investors had a Hall of Fame, Warren Buffett would occupy his own wing.
People from all over the planet look up to him, read his biography, hop on a plane to go see him talk.
He took a failing textile mill and turned it into a $1 trillion conglomerate. It has insurance companies, Dairy Queen, railroads, and energy businesses.
For decades, Buffett's investment savvy has led Berkshire Hathaway to beat benchmarks.
One of the biggest asset managers today, which is Vanguard, the entire philosophy is no one's really going to be able to beat the market, so you might as well not even try. Well, okay, no one besides Warren Buffett.
If you look at the total returns, Berkshire blows the S&P 500 away.
The legendary investor Warren Buffett.
So when the 95-year-old announced he would retire at the end of 2025,
Greg should become the chief executive officer of the company.
It marked the end of an era at Berkshire Hathaway.
Greg Abel led Berkshire's energy business for so many years. But it is tricky. Warren Buffett has not only been a very good investor, but he's also pretty charismatic.
He won't be writing the annual letter next February. This is a big change because Buffett fans have been poring over that letter over the years because it's full of witticisms, investment advice, pearls of wisdom. There's also the fact that he's not going to be taking Q&A at the annual meeting next May in Omaha.
Morning. Welcome to Berkshire Hathaway.
He was talking for 4 to 5 hours every year and taking questions from people that follow him all over the planet. That is going to be a big change because Buffett's personality is unmatched in the investment world.
Well, subscribers can watch the full documentary on the terminal and Bloomberg.com. It'll also be available on Bloomberg's YouTube channels at a later date. Now, some other stories making the news this Friday. Bloomberg understands Jane Street's record trading boom this year has been fueled by smart bets on AI, particularly tied to Anthropic. Sources say Jane Street's investments in private companies and funds lifted third-quarter trading revenue by about $830 million, with Anthropic accounting for most of those gains. Jane Street is on pace for its best year ever, leapfrogging many Wall Street rivals. Meanwhile, Meta shares jumped on Bloomberg's report that Mark Zuckerberg is expected to make significant cuts to resources for building his company's so-called metaverse. We're told executives are considering budget cuts as high as 30% for units, including Meta Horizon Worlds and Quest VR. Zuckerberg had previously framed the project as the future of the company and the reason for changing its name from Facebook. US senators are seeking to ban NVIDIA from shipping advanced AI chips to China. They have introduced bipartisan legislation in the bid to codify existing US restrictions on exports of advanced semiconductors. The bill would effectively bar NVIDIA from selling its H200 AI chips to Chinese customers, as well as its more advanced Blackwell products. And Bloomberg has learned that Goldman Sachs paused a planned $1.3 billion mortgage bond sale for Cirrus One after a major outage at one of its data centers crippled CME Group. Sources say early feedback was due November the 25th, but days later CME's global markets went down for more than 10 hours due to a cooling system failure at Cirrus One's Illinois facility. The deal is now on hold, but may be revived in the first quarter. Coming up, we're going to look ahead to US PCE inflation data out today and what it means for the US economy with Ellie Henderson, economist at Investec. That conversation coming up. This is Bloomberg. Good Friday morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Global stocks in the green as investors await delayed US PCE data. Fed chair frontrunner Kevin Hassett calls for a cut next week. Meanwhile, the Japanese yen strengthens with the BOJ said to likely hike rates this month. Indian Prime Minister Narendra Modi extends a warm welcome to Russia's Vladimir Putin as New Delhi defies pressure from the US over its ties with Moscow. Plus, a Bloomberg scoop, Warner Brothers is set to have entered exclusive talks with Netflix to sell its film and TV studios and HBO assets to the streaming giant in a move that would bring seismic change to the entertainment industry. Let's get to the markets then. European futures pointing to a fourth straight day of gains for European stocks. US stocks also set for a fourth straight day of gains if things hold. European futures then pointing higher by 0.2%. FTSE 100 futures looking to add just 3 points. S&P E-mini after the S&P 500 notched up gains of just 0.1% yesterday, looking to build on that today, up 0.2%. Nasdaq 100 futures point to the gains of 0.4. Let's flip the board and have a look cross asset. There's a bit of stability in the Treasury markets right now. Yields were a little higher yesterday in the session, 409 right now on the benchmark US 10-year. That could adjust, of course, around the inflation data that drops later today. The PCE gauge, of course. The Japanese yen is stronger in the session, up 0.3% on this Bloomberg scoop around the BOJ's thinking at its next meeting. 154 right now in the Japanese currency, and that is weighing on Japanese stocks. Yen strength higher, of course, Japanese stocks down on that story. Brent at $63 a barrel, and Bitcoin back below 92,000 at 91,996, just a little softer by 0.2%. Let's get more then on that news from and around the BOJ, the Bank of Japan, of course. Bloomberg's Valerie Teitel joining us now. Valerie, so we're hearing, it's not a huge surprise that the BOJ is thinking of hiking to 0.75% at its next meeting, but the signalling is interesting, and at a time, of course, when you have a new leader in Japan who's focused on stimulus.
No, that's right. You're right to point that out, Tom. We are 90% priced for a Bank of Japan hike when it comes to their decision in 2 weeks' time. But it's all about the guidance, and sources were telling Bloomberg overnight that they could leave the door open to further hikes next year. A hawkish hike from the Bank of Japan could be the one surprise we have left on the calendar before we wrap up 2025. We are seeing the yen strengthen off the back of this scoop. As you mentioned, it's stronger by around 0.3%, but the yen is hanging out at around levels the weakest all year. So again, a hawkish central bank decision, hawkish guidance would be something that could stem the weakness of the yen of late. I do want to mention we are seeing a reaction as well in fixed income across the JGB curve. Some pronounced weakness in the front end. We have those 2-year yields in Japan up around 3 basis points. And we were reminded on Monday just how instrumental JGBs are to global fixed income. We heard from Ueda. He was speaking to Parliament, raising the bar for that December hike when he did. And we did see a global fixed income sell-off off the back of that. So it's not only just JGBs we have to watch, but its impact, at least on the Treasury market, on gilts, and on the European bond market as well. But let's go over the remaining Fed rate decisions that we have remaining this year, because we do have still a lot on deck before Christmas comes. The FOMC is the big one next week, obviously very likely to cut interest rates, as well as the Bank of England in 2 weeks' time. Both of those are around 90% price for a 25 basis point rate reduction. The ECB is expected to stay on hold, and the Bank of Japan expected to hike. It's all about the guidance and moving forward and what they can possibly tell us about what they're going to do next year.
OK, Bloomberg's Valerie Teitel, thank you very much indeed, breaking down what we expect to see. And a throw ahead to what to think about when it comes to the Fed. The PCE gauge, of course, out later today. Let's bring in Ellie Henderson right now, economist at Investec. And Ellie, I want to start there with what you are thinking about when it comes to Fed. Does the PCE gauge later today, does it matter given how backdated it is all the way to September? Could it change the calculus, essentially, for markets that are almost fully pricing in a Fed cut at its next meeting?
The PCE inflation data is always important because it is the Fed's preferred gauge of inflation. But as you say, it is old news now. The data is for September. We received the CPI print earlier because it had to be released because that's what uplinks benefits ratings. But consensus is looking for a small tick up in the PCE inflation, the headline measure. What we'll be looking at is we'll be digesting the report and looking at those high import intensity goods to try and gauge more of a tariff effect, because we haven't seen much of a tariff effect in the data so far.
Is it your suspicion, is it your expectation that tariff impact will come through and have more of an inflationary impulse into 2026 then?
Our base case assumption was that the tariffs would affect inflation. We have seen small pockets in the data, but I think what we're also looking at are reports such as from the Beige Book that came out that suggested that actually firms were taking a lot of the cost on themselves and spreading it across the supply chain. So it's possible that we've got our pass-through incorrect in terms of we kind of thought a two-third pass-through to the consumer.
You weren't alone, Ellie. A lot of economists called this one wrong, didn't they?
But it is also possible that it's just a lag thing. We do have still goods in bonded warehouses that aren't being affected by the tariff yet because we had a lot of front loading. So time will tell. But at the moment, the Fed has to make a decision on the data they have now. At the moment, it looks like there's a greater risk to the labour market, and that's likely to prompt a cut next week.
So how clear is the picture for you and the team into 2026 with the potential that inflation story does come through? As you say, it's not clear-cut yet, that doesn't come to kind of vindicate your views. Also at a time of stimulus from the US with the tax bill that's come through and the cuts there. So how do we think about how much clarity is there in terms of how far the Fed can go with a more dovish structure in 2026?
It is really hard, but ultimately interest rates are still modestly restrictive in the US, so there is room to dial back policy restrictiveness before we get to that neutral rate where policy doesn't weigh on the economy.
What is the neutral rate for you? Is it 3%, 3.5%?
It's a touch above 3% on our own estimates, and that's kind of where the Fed is guiding to. But I think you're hinting at it here that who knows what happens in the second half of next year, because we will have a new Fed chair. At the moment, Hassett seems to be the front runner, but we're not going to find out accordingly per Trump this week until the new year, and I think it's not a done deal until it's actually been announced. He might change his mind, but ultimately it's going to be someone with a bias to lower rates. But the question is, that individual is just one person on the voting committee. Can they get their colleagues to vote with them?
Yeah, the importance, or at least the focus on whether or not they can influence their colleagues. Just before we move on to the UK briefly, do you think we get to about 3% on Fed rates then, given what you know right now, by the end of 2026? Is that realistic to assume that?
We are looking at an end-year target of about 3.25 to 3.5%,
okay,
but with a significant downside risk if you do have a chair that manages to influence his members.
OK. How are we thinking about the BOE post-budget? The gilt markets have been outperforming their European peers, so that on one level is a win for the Chancellor, but maybe that points to investor concerns about the health of this UK economy. How do things stand as you think about the inflation dynamics and the positioning of the BOE?
The Chancellor would definitely be encouraged by the reaction on budget day, the fact that we saw gilt yields fall by about 12 basis points on the 10-year measure, especially given all the concerns going into it. I think that largely reflected that she increased the amount of headroom for her fiscal rules, but there are still many nerves in gilt markets. We might have had a good week, but we've seen in the media that when there's speculation about a potential leadership challenge, you do see gilt markets react, because there's the concern that if Starmer and Reeves do go, are they replaced with someone that maybe isn't as wedded to the fiscal rules? And that's a key thing we're looking out for next year.
And there's space now for the BOE to go further in rate cuts?
We think so. If you looked at the vote last time, it was 5-4, but you could see Bailey was very much on the fence, and it wouldn't take him much more to commit to a rate cut. So we think he will deliver with that vote when they meet it in the middle of this month, especially because now we've had one more inflation print that has actually showed that inflation has come down. Hopefully this peak in this mini cycle is behind us. If he was looking for the budget as a reason to vote for a cut, he may not have got that, because the measures in terms of the fiscal tightening doesn't actually come in for a couple more years outside the Bank of England's forecast horizon. But we think there's enough other reasons to vote for a cut.
Have we broken the back of sticky services inflation here in the UK? How do you project inflation and how that story evolves next year?
Well, next year we have the 20% increase in VAT on private school fees falling out of the comparison. So in January we should see a large step down.
Is that a significant factor in the inflation basket?
It does.
VAT on private schools?
It was a big contributor to the way up. So it's also a factor in our inflation forecast. We're also hoping that the rise in administered prices, such as water bills, aren't as big next year as they was this year, and that should also help inflation come down. But what the Bank of England's also going to be looking at is that underlying inflationary pressure, because that ultimately is going to determine longer-term trends for how far they go on rate cuts. But we think the direction for rates is down. What
would need to get UK economy growing above 1% in 2026? What would need to align for that?
Well, we hope that next year the government's pledges to increase house building, for example, will come to fruition and we'll see a boost to economic growth that way. We're also, of course, looking to the AI boom. If you can efficiently use that technology, then there's potential for growth to run faster. Of course, if the UK does that, other economies around the world will do that as well. But
if those two things come together, what does UK growth look like for 2026?
We're hoping it's above what we are now. We're hoping, you know, if we can kind of get to the 2%, that would be brilliant for the Chancellor. But that's not our base case at the moment. You have to have the stars aligning to kind of get to a faster pace of growth.
Base case is?
We're looking for above 1.5%.
Above 1.5%. Yeah. OK. Ellie, fantastic. Thank you very much indeed. Happy Friday. Have a great weekend. Ellie Henderson, economist at Investec. Switching to corporate news now. Bloomberg understands that Warner Brothers Discovery has entered exclusive negotiations to sell its film and TV studios and HBO Max streaming service to Netflix. For more on this Bloomberg scoop, let's bring in our deals reporter, Manuel Baigorri. Manuel, how significant then would this be?
Tom, significant indeed, because it's going to send shockwaves in the industry. It's a transformative deal for the entertainment industry, not only in the US but globally, given how powerful these franchises are. It would be definitely the biggest ever deal by Netflix. They've never done a deal of this magnitude. And it will also, be very, very consequential for competitors, take Paramount, Walt Disney and others that are also growing in this field. So surprising also, Tom, to see a potential $5 billion breakup fee. That is quite remarkable, and perhaps one of the reasons why Netflix seems to be, according to our sources, pulling ahead of the game here.
Yeah, that's a chunky breakup fee, as you say, $5 billion US. Manuel, you are the deals expert, so what are you and the team watching for in terms of how this story evolves? This all could happen quite quickly, is my understanding.
Yes, Tom, it's moving really fast. We understand that potential agreement could be just as close as just a few days. We may see something announcing over the coming days. But as with any auction, we need to keep our ears close to the ground because things can move quickly in different directions. I mean, the fact that they have potentially signed exclusivity, that should grant Netflix with enough legroom to potentially get the terms signed, but you never know. Companies can move aggressively if they feel that they are losing out to a competitor. So I think the next few days are critical, although everything seems to suggest that is Netflix really the one to win on this auction. But let's keep our ears pretty close because things can unfold in every direction.
Indeed. Bloomberg's Manuel Baigorri, thank you very much indeed on that potential tie-up between Warner Brothers and Netflix and the broader implications for the entertainment space as well. Coming up, European startups, meanwhile, appear to be regaining momentum in 2025. We'll be discussing the state of the sector with Atomico's Tom Wehmeier. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The value of Europe's tech sector continues to rise. According to Atomico's State of European Tech report, sentiment among the community is also picking up. 50% of survey respondents this year are more optimistic about the future of European technology than they were a year ago. Tom Wehmeier, partner at Atomico and State of the European Tech report author, joins me now. Tom, this is something you do on an annual basis, so you have a finger on the pulse of what is happening across the European ecosystem. So thank you for your time. What stands out to you in 2025? What are fund flows into European tech looking like?
Well, I think, as you've just said, this has been a story of growth and momentum this year, rising ambition levels, rising optimism, and I think that's well-founded. We've seen record levels of entrepreneurship in terms of new startups being created, record share of new unicorns minted, so those billion-dollar companies, ecosystem value at an all-time high, and just seeing emerging European leadership in areas from AI to defence to nuclear fusion. And so I think if I look back on last year, there were still a lot of questions about, can Europe really do tech? And I think that question's been put to bed. It's a fact. And now the question moves on to, well, just how big can we take this ecosystem and how fast can we sort of scale that trajectory?
What's the regional breakdown in terms of countries that are drawing the most investment at this point into which sectors?
Well, I think the story that we've seen over the last decade has been technology diffusing all across Europe. So, you know, if I look back to when we started our report 11 years ago, it was, you know, the UK that was dominant. It's still the largest and most mature ecosystem, of course, but, you know, who can ignore what's happened in Sweden this year? You know, Silicon Valhalla, just seeing amazing leadership.
Silicon Valhalla, I love that.
Yeah, amazing leadership there in AI, the likes of Lovable, Neko Health, Legora being some of the standout companies that have had great years there.
Are the fund flows into AI crowding out funding to other parts of the ecosystem?
Look, I think it's fair to say that AI's been the dominant theme. You know, you wouldn't be surprised to hear that. It's been led by, you know, some huge rounds into that emerging cohort of European AI leaders. Just the other week, we saw Black Forest Labs, we've seen Neko, as I just mentioned, Legora, Framer, you know, so many big rounds there. But it's been about so much more than AI this year too. I think rockets, robots, drones, advanced materials, energy, these have all been sectors that have helped fuel record levels of investment into deep technology here in Europe.
On deep tech, you need patient, long-term capital. How much of a constraint is that kind of capital for the European ecosystem?
Well, I think this is one of the big questions for next year and the decade ahead, which is how do we basically scale up the firepower that we have to put increased capital behind the momentum that we see in the ecosystem. The reality is that we've been structurally underinvesting in funding the future of growth and innovation here in Europe. If you look at Europe's biggest institutions, they're woefully underallocated to investing in venture capital as an asset class. So pension funds, for example, here in Europe, 0.01% of their AUM currently flowing into European VC. So that's the big opportunity.
0.01%. How does that compare to their US counterparts?
Yeah, I mean, it's significantly higher.
Is it?
And so this is the opportunity. How do we mobilize European assets to fund the future in Europe? And I think what's exciting is that we're seeing a lot of catalytic programs, both at a regional level, but also at the national level, to make that change happen.
I saw Ursula von der Leyen, of course, the European Commission President, speaking at the Italian Tech Week, championing European tech. Is the team in Brussels, actually doing anything on regulation? This fragmented regulatory regime that European tech faces? Well, is anything materially changing, Tom?
I saw that too, and von der Leyen's message was, how do we make Europe worthy of our builders? And I think the good news is that the problems that we need to fix are really well understood. And actually, if you look at the roadmap for the next 12 months in Brussels, you know, there's a whole stream of programs designed to fix the friction that we still see.
Is there?
In the
Okay.
ecosystem.
Over the next 12 months, we could actually see material changes?
Yeah, so, you know, everything from the Scale Up Europe Fund to increase more capital flows to the 28th regime to help address the fragmentation. You know, a bunch of different initiatives on the table right now in design, in discussion. And the question is, will they do the hard things and will they solve them in a way that actually fixes the problems?
Where does Europe compete and potentially win on AI, given the sheer amount of capital being invested in the US? I mean, the gap is dwarfed, isn't it? Where are we best positioned?
I think what's really interesting is that we tend to have this narrow scope looking at the general model builders. They've sucked so much of the oxygen and a lot of the capital out of the room. But this is a vast frontier of opportunity. And if you actually look past, you know, general language models into areas like audio, video, communication, the likes of 11 Labs, Black Forest Labs, DeepL, or even in vertical AI with the likes of with Cradle and Corti, you are seeing emerging European leadership in so many different areas.
Okay, so that leadership is coming through. What are some of the key themes that you're watching for in 2026? If there was a couple of standout either names or themes or regions that you'd be watching for next year?
I mean, it's going to be another story of AI, and then I think the big story is, can we fix this friction? Will we see those policy changes come through, increase capital flows? Because if we do, I think we will help increase the scale of the upside that's possible, and also, you know, just help bend that curve and accelerate the growth and the momentum that we've seen this year.
Tom, Fantastic. Thank you very much indeed. Really valuable insights in terms of the health of the European tech ecosystem. Tom Wehmeier, partner at Atomico and State of European Tech Report author. A reminder that next week, Bloomberg Tech Europe takes a deep dive into ASML, Europe's most valuable company and one of the most important cogs of the global AI supply chain. The episode features an exclusive interview with Christophe Fouquet, chief executive, of course, of the Dutch chip equipment maker. Catch that conversation, 6:30 a.m. UK time next Friday here on Bloomberg TV. It'll also be on YouTube as well, of course. There's a lot more coming up. This is Bloomberg.
If you look at the communications from the Fed governors and some of the regional presidents, they now seem much more like they're leaning in the direction of a rate cut, which is I believe, the right.
And how much would you like it to be?
You know, in the long run, we've got to get to a much lower rate. If there's consensus around 25 basis points, which it looks like there is, then I'll take it.
That was National Economic Council Director Kevin Hassett, of course, and reporting from Bloomberg suggests that he is the front runner to take over from Jay Powell come May of 2026 at the head of the Fed. He also said in that interview with Fox News that he would continue to be data dependent when he was asked how much further he'd like to see rates pushed down if he was to take on that role in 2026. That brings us on to a preview around PCE and the data that drops later today. It is for the month of September, so it's backward-looking to some extent. Well, it is backward-looking, but we know that the Fed will still be looking at this, at least to some extent. Maybe it's slightly less important than it has been in previous months, but you can see the stickiness. Core is expected to come in, core PCE year-on-year for the month of September at 2.8%. The white line is the core, the blue line is the headline number. So as we think about the tariff effects that haven't come through as strongly as many economists expected, there is still this relative stickiness around core PCE. Consumer sentiment survey, consumer data in terms of shopping habits and the move down in terms of pricing is also something that we expect the Fed to be watching. But the PCE data, of course, coming out later today, we'll be watching that ahead of the Fed's decision. Markets almost fully pricing in that 25 basis point rate cut next week. Let's flip the board and have a look at what's happening in terms of the debt load and at least the issuance coming through from the US Treasury. Almost $30 trillion, topping $30 trillion, which is almost 100% of US GDP. This is the total amount of bills, notes and bonds doubling since 2018. So question mark really in terms of whether that starts to become a pressure point at the back end of the curve, the 30-year, of course. President Trump elected partly on a pledge to reduce the deficit. We're not seeing much evidence of that so far. So that is just a data point to mark. To access these kind of terminals, you can go, of course, on these charts. Find them on the Bloomberg terminal and across, of course, Bloomberg TV. You can get those on the terminal. There's a lot more coming up, of course. The opening trade is coming up. Some great interviews as well. Brian Monhearn, Bank of America, 9:15 a.m. London time. Stay with us. This is Bloomberg.